In the world of cloud computing, you've got companies that soar and companies that stumble. Well, edge cloud pioneer Fastly, they've done both. After a really brutal period that had a lot of people writing them off, they've suddenly roared back to life with some absolutely record-breaking numbers. But the question is this a real comeback story? And that's really the big question we're going to dig into today. Is this recent success just a temporary blip? A flash in the pan? Or are we actually watching a durable, long-term recovery for a company that could be a key player in the internet's future? To get there, though, we first need a super quick primer on what Fastly actually does. So, what is this edge cloud thing anyway? Well, think of it like this. Normally, when you request a video or a website, your request has to travel all the way to some big central server that could be hundreds or even thousands of miles away. The edge cloud, instead, brings that data and computing power way, way closer to you. And the result? Everything is faster, smoother, more responsive. That's the playground Fastly operates in. And wow, that playground has been the scene of a pretty dramatic turnaround lately. So let's break down how Fastly went from a company that was basically in reset mode to a full-blown rebound. To really appreciate this comeback, you have to understand just how tough things were. Just a year ago in 2024, Fastly was in some serious trouble. The company was dealing with major headwinds. They were losing customers, growth was slowing down, and investor sentiment was, to put it nicely, at rock bottom. The contrast between then and now is, well, it's stark. In 2024, the whole story was about customer churn and slowing growth. But if you fast forward to just the third quarter of 2025, the narrative has completely flipped. We're talking record revenue, positive cash flow, and healthier profit margins. It's truly a night and day difference. Let's dig into the numbers that prove it. Okay, let's start at the top. In Q3 of 2025, Fastly hit a record $158.2 million in revenue. Now, that's not just a good number, it is the highest in the company's entire history. This is really the first piece of hard evidence that this turnaround is the real deal. And it's not just about the total amount either. That revenue represents 15% year-over-year growth, which is the company's highest rate in several quarters. This part is so critical. It shows they've slammed the brakes on that slowdown and are now actually accelerating again. That is a huge sign of momentum. Now, let's talk about financial health, because this might be the most impressive part. In the same quarter last year, Fastly burned through more than $7 million. This year, they generated over $18 million in free cash flow. That means the business isn't just growing anymore, it's becoming self-sustaining, which is exactly what you want to see. So, where is all this growth coming from? This is absolutely crucial. It's not just from their old-school content delivery network. The real fuel for this fire is coming from their newer, high-value services. Security revenue shot up 30%, and their advanced edge compute and observability tools are up a staggering 51%. This proves their whole strategy to sell more than just speed is really, really working. But Fastly's comeback isn't just happening in a vacuum. It's happening inside a massive market tailwind. The opportunity they're going after is set to absolutely explode over the next few years. Just look at these numbers. The edge cloud market is projected to grow from $24 billion today to over $100 billion within the next decade. That is an enormous wave of demand, and Fastly is positioning its surfboard to ride it. So what's fueling this fire? Well, it's basically all the technology that's shaping our future. You've got the rollout of 5G networks, the explosion of AI applications, the billions of Internet of Things devices, and of course, our insatiable demand for high-quality instant video. All of these things need the speed and power of the edge cloud to work right. So, with strong results and a huge market, you'd expect the experts on Wall Street to start paying attention, and guess what? They are. Let's take a look at how they're reacting to Fastly's rebound. You can practically track the changing perception right here on this timeline. In the middle of 2024, Wall Street was bailing, hitting the stock with a wave of downgrades. But by late 2024, Oppenheimer saw some signs of life and issued an upgrade. Now, after these latest results, other big names like RBC and Piper Sandler are following suit and raising their price targets. The trend is pretty clear.
And this isn't just blind optimism. The analysts are pointing to specific strategic wins. Piper Sandler, for example, highlighted Fastly's success in selling those high-growth security products we just saw, and in getting customers to use their entire unified platform, not just one piece of it. That points to a really sticky long-term business model.
Okay, so bringing it all together, what does the future hold? Well, the path forward is definitely not going to be easy, but the opportunities at the edge are just undeniable.
Let's be realistic here. Fastly is not playing on an empty field. They are up against some absolute giants like Cloudflare, Akamai, and of course, the hyperscalers like Amazon Web Services. The competition is fierce, so they really need a clear advantage to win.
So what is their competitive edge? According to Fastly, it really comes down to a few key strengths. First, just a relentless focus on speed, delivering the absolute lowest latency possible. Second, and this is a huge one for their customers, is a highly programmable platform. This gives developers deep, real-time control to build custom experiences right at the edge, something older, more rigid platforms just can't do. Third is seamless API integration, and finally, integrated security that protects against attacks before they even get close to the core server. It's a platform truly built for performance and flexibility.
So the bottom line is this. Fastly has weathered a serious storm, but they're not just surviving. They're emerging with a much clearer strategy, way stronger financials, and a massive tailwind from a market that's set to become one of the most important in all of tech.
And that leaves us with one final, crucial question to think about. With a $100 billion market at their back and fresh momentum from their recent execution, does Fastly have what it takes to turn this rebound into a true position of leadership in the future of the cloud? Well, only time is going to tell.